Good morning, Steve Free in Chicago with the morning grain comment. Well, behind me is a combine here in northern Illinois that's harvesting corn. USDA said that the corn harvest was about 52% done. 41 is average, and corn prices are up for the fourth straight day. We're testing key resistance at around the 535 area in December, and you've seen very positive ethanol margins. U.S. corn export prices are the cheapest feed grain in the world. We also noted that the Dalian corn futures are at 2-month high close, and October through September corn imports were 29.6 million tons versus the U.S. 28. If you combine corn with sorghum and barley, October-September imports of those three were 50 million tons, 2.6 million tons above the USDA numbers. Kind of implies that their import numbers could be at least near that next year and maybe a little bit higher. Monteith corn futures seem a little toppy as we get better harvest situation in France, but still a lot of support underneath the market due to low imports and the fact that the price of corn in Europe is $30 a ton cheaper than wheat. We also noted in the beans, the U.S. soybean board crush margins, they are the highest in 3 years. And also soybean oil as the share of the crush is the highest since 1988. U.S. exports were big at 84 million bushels, but we're still at 217 million bushels shipments, which is 50% of a year ago. U.S. soybean harvest 60% done versus 73 last year and 55 average. And the basis is firming as this harvest nears an end and farmer selling begins to slow. Soybean, Brazil planting 25% done. This is ahead of normal, and conditions down there are favorable as rains in the south move to the north and central. Argentina, though, is dry, and so we have to kind of watch and see how conditions there for both corn and beans move along. We did note that Pakistan cut its vegetable import duty by 50%. China's soybean crush to date, though, is down 13%, and there were no new U.S. soybean sales announced yesterday to China. Much of the decline in crush probably has to do with their electricity crisis. Weather-wise, U.S. is dry in the west. The 2-week forecast suggests some rains in the east. Southern Plains is also dry with about 70% of our winter wheat planted, and the first crop ratings for the 2022 crop will be next week. The Monteith futures mixed, and we've got higher Russian prices due to higher export tax, and that's offering support to the wheat market. Dalian soybean futures and meal are lower, while corn, palm, and soybean oil is higher, and Malaysia is on holiday. So for 4 straight days, beans are up, and we're testing the 1230 area, but 1250 is the key resistance. Meal looks like it's made a seasonal bottom around 310, but not a lot of news to move a lot higher. And we're stalling it after a 5-day rally in corn near 535 resistance, and wheat is also up for the 4th straight day. You've got the dollar lower, crude higher above $83, and with the lower dollar, gold is higher.